It is 9:31 a.m. on the 18th of March. My name is Boaz Shoshan, and this is another market update that we are recording this morning. Now, yesterday, you saw the closure of two UK property funds as a result of a liquidity squeeze. It appears that the demise of Neil Woodford's fund and his reputation as well was indeed a forward indicator of what the next crisis was going to look like. There's been much more of a global funding squeeze in general that's causing the dollar to rally a lot more. Interestingly, some of the liquidity that the Federal Reserve is trying to inject is not making it into the market because of regulation that was passed after the last crisis. And that's causing the dollar to have a very strong rally. I'm joined today by Sam Volkering over at Revolutionary Tech Investor and by our publisher Nick O'Connor. Sam, I've not spoken to you yet on what you make of the crisis in general. What are your thoughts on what's going on?
What are my thoughts? Well, thanks for having me on the today's podcast. For a start, it's a crazy time. People, markets, governments have just lost their bundle. Society has lost its bundle, and that's being reflected in the market and values and prices. And it's just unadulterated, pure fear, and it's mayhem. It's mania out there. So it's tough. It's bloody tough for investors to figure out what's going on. Should they be buying stocks? Should they be selling their stocks? Should they be looking at alternative investments like crypto? It's a really confusing time, and that's what we're doing this sort of stuff for, is to try and give guidance and direction to people when they need it most. And that's what we're trying to put together.
Yes, it's interestingly to see what's going on in crypto. I think it was from my perspective at least, I think it was safe to say that if you did have a massive liquidity crisis, there's going to be dollars are going to get sucked out of the riskiest assets. Whatever can be sold will be sold if everybody needs currency. If they have to meet a margin call, they just have to sell whatever assets they've got. If they need to reduce leverage, then they'll sell the riskiest assets first. So I think it was fair to I think it's quite understandable that crypto has suffered as hard as it has. But what I think is really quite interesting is if we see stock exchanges shut, as we've seen is now going on in the Philippines, just on until we reopen them basis. They're not going to be reopened on a scheduled time. They're just shutting them until this is over. If you see that occur in a lot more jurisdictions, and you see that capital has there's no place for prices to be set. Charlie Morris the other day commented that effectively what's going to happen is Bitcoin will become the global equity futures contract of the world. It will function as effectively a derivative of whether or not stocks are going to go up when we get them back online, or whether or not they aren't. What do you make of that?
Yeah, well, it's okay. So it's interesting, right? In the sense that, so the crypto markets took a bit of a hiding as the sort of peak coronavirus fear started to play out. Because you're right, in situations like that a real black swan event, investors will just sell everything. It doesn't matter what it is; they'll just get out. But then, when the US announced they were going to inject however many billion, or I think it's tipping over $1 trillion now, in terms of printing money and pushing money and printing money into the financial system, then Bitcoin and other crypto sort of popped. So in one sense, yes, the crypto markets are kind of correlated to all markets when there's a non-financial related event. But at the same time, when you look at a financial system and the systemic issues of the actual financial system, and then we see money printing, then crypto actually sort of turns the corner and does reasonably well. So in that sense, if all of a sudden markets start to close, if we start to see bank runs, then my take on it has always been that cryptocurrency markets, and Bitcoin in particular, is going to be a better asset than most to to counterbalance that. And so, yes, if the markets start to periodically shut or take a holiday to, I'm sure the authorities will call it to ensure market integrity, but it's basically just to save their own backsides. Then yes, the Bitcoin is the primary cryptocurrency that most people are aware of and understand, at least the very basic idea that it exists. I would think we'll continue to do well. I'm not sure if. I get Charlie's point, but I'm not sure if it acts as a quasi sort of futures market for what stocks will do, because there is still a level of disjoint between how Bitcoin does move and the actual markets when you break it down into the pure financial reasons as to how markets move and how crypto markets move. But if all of a sudden the death toll from coronavirus starts peaking out to like a million or millions, then yeah, crypto, but all assets in that sense are going to be in a bit more trouble. So yeah, it's a tricky one, but in times like this, with crypto values depressed, I see it as an opportunity to continue to be adding, particularly to something like Bitcoin, to a portfolio.
Yeah, I think it's interesting when you have the Bitcoin market being 24 hours. It's just like the foreign exchange market, but it's even less constrained than the foreign exchange market. So it can always represent a price. It can always give you some kind of value. I find that there's definitely sort of an anti-fragile element to at least sort of the free market forces. Free market forces can always be represented within the Bitcoin market. They can't be shut down the same way that conventional markets can. With the decline of the Bitcoin price as a result of liquidity squeeze, I think it's quite similar to just the way gold and silver reacted during 2008, the way they're reacting now, where there is a massive funding squeeze, there is a massive liquidity shortage, and as a result, all of this stuff is getting sold. But after the dust has settled, after the chaos is over, after Lehman Brothers, after the bailout, both gold and silver went gangbusters, went to the moon. They priced in all the money printing, all the currency dilution that was required to solve the crisis. And I think that maybe if Bitcoin has, it does have some. It's not the same as gold, but it was built with some gold-like elements in mind. If that's correct, well then after this is all over, I think the Bitcoin story is going to sort of take hold in the later stages of the coronavirus story, when all of these huge efforts that we're hearing about come home to roost. Nick, what do you make of it?
Well, it's a very interesting conversation. I'm just trying to work out. I think there would be three phases to what's happening. I think there are going to be three phases to what's going on. And we're living in phase one now. So I would call that the sort of, it's the inciting event. It's the panic. You called it a margin call or a liquidity squeeze. It's basically the moment where people panic, right? Okay, what's going on? New reality. What does any of this mean? I've got to meet certain obligations, so everything falls because what can be sold will be sold. Excuse me. And I feel like we must be getting quite close to the end of that phase in terms of if the severity of this hasn't got through to you yet, then I'm not really sure whether you're paying attention. This matters. So the panic phase maybe is coming to an end, or will come to an end soon. That doesn't mean it's the end of falling markets or of volatility. It just means it's the end of people resetting their expectations to what's going on. So if you have a big long bet in the market, if you haven't unwound that by now, then you're probably not going to. You see what I mean? So there's that phase. Then there's the kind of disequilibrium. So there's the price discovery phase, which I think will last 2 or 3 months. And that's the point at which we try to figure out, or markets try to figure out, what this means long-term for the price of anything. So remember that markets don't set prices, they discover them. It's a process by which lots and lots of people come together as a sort of voluntary collective, and through their own actions, a price emerges. So right now we're trying to work out how bad this will be. So we don't have the data on what the resulting recession will look like. Seems likely there will be one. We don't know to what extent trade will fall. We don't know any of those things. We also don't know what the impact of all of the stimulus will be in the other direction. So you get this pulling of a dynamic of stimulus on one side and the real economy on the other side, and we don't quite know where that comes out. So that's the kind of price discovery phase, which I think we're entering into. What you guys, I think, are talking about is the phase after that, which is actually when things start to open back up again, when the result of all of these actions becomes manifest in the world. So I would call that sort of day zero. It's kind of the reset period on the other side. And to me, that is far more interesting because I think it's somewhat more predictable. I can't predict how this is going to play out in the short term. I don't think anybody can. Maybe they can in terms of the medical experts, but right now, who knows? But what you're talking about is, okay, when the borders reopen, when activity resumes, when some form of life begins again, or a real life, not trapped in your house on lockdown, what does the world look like? And in that world, well, that world is a very different world to the one we're living in now, because some of the interventions we're seeing in the markets are extraordinary. So I actually think maybe that's the most interesting element of what's going on, which is, what soars out of the crisis, not during the price discovery phase, but after that, when things start to reopen. And I would be willing, I can tell you my own idea is, I'm looking at gold miners. I already own gold and silver, but I'm looking at adding to that. I'll be looking at cryptocurrencies because I think you can't make these sorts of interferences in the monetary system and not expect some form of consequence down the line. I would just caution as to whether or not that will come next week or in 3 months, maybe even 6 months. It might take time for us to actually get to that final phase.
Sam, during the while we're during this massive lockdown period, one thing I've noticed, and which I imagine most people have, is just how much we already use technology, and that everybody is simply going to use technology all the more. I mean, nobody is taking this as an opportunity to unplug from technology, right? Nobody is you taking this like a monk's retreat or anything. And okay, I'm confined to my house, and not only am I confined to my house, I'm not going to use my laptop. Yeah. What do you think what do you think the long-term consequences of this sort of containment period, where people are way more plugged into their machines and their devices, is going to be?
Yeah, so there's two sides to this. There's the short term. It's a bit like what Nick was saying. There's sort of this phase 2, which we're sort of about to enter, and I agree with him on that. And then there's this sort of the phase that comes off the back of that, where what's going to soar out of it. And they're two different periods that I think there are opportunities to play within that. And the short term one is like what you said. If you're on lockdown or self-isolating or quarantined, what are you going to do? You're gonna, people are going to work from home, and they're already, companies like Slack and Microsoft Teams and those sorts of organizations that operate cloud-based services like that to video conference. We're video conferencing now on Ring Central, which I think is part of Zoom, right? So these are all the kinds of short-term opportunities that are out there in the market. I mean, look at the American outdoor brands, the company that owns Smith & Wesson that sell guns. If their stock price dipped, and it's up over 50% in the last couple of days, because people are quickly realizing that in absolute unadulterated panic situations like this, people freak out, and they freak out so much that they think other people are going to kill them. And so they're going to go buy guns in America to defend themselves. And so there are people queuing up. There's a run on guns because people are worried they're not going to be able to get guns and ammo in the US. Just like in Holland and in Canada, there's a run on weed because people think they're going to run out of weed when they're locked down. And so now that it's legal in certain spots, all the weed shops, Canopy Growth shut down all their retail outlets. So everyone's been queuing up to get their stock of weed so that, when they're on lockdown, they can, as a guy in the Gold Coast said that just returned to Australia the other day on the news, he goes, so they can be at home and rip a few cones. That's what they're going to do in these situations. So they're going to stream from Disney Plus and Netflix. They're going to be online. So they're going to go and, Pornhub is offering free memberships to people in Italy while they're on lockdown. This is the weird, crazy kind of stuff that's happening, but it creates opportunities. And then it's a bit like it's this pent up frustration of people being stuck at home and not being able to socialize. The human condition, we love to be around other people and do enjoyable, fun stuff. As soon as those restrictions unleash and we're actually able to return back to normal life. And I don't buy into the idea that long term everyone's just going to work from home. Yeah, there'll be some minor changes and people, businesses will start to realize, okay, there are advantages to having remote workers and more people working from home more of the time, but it's not going to completely change how we work and how we socialize. We're not going to stop going to pubs. We're not going to stop going to the cinema. We're not going to stop going out and enjoying ourselves in social settings. We're not going to stop going to sport and events and concerts and all those sorts of things. So when we get through this, and we will get through this, and I think quite likely before the end of the year, there's going to be huge opportunities in all those companies, if they survive, I might add, through this phase 2. But if they can make it to phase 3, then, there are companies out there like, Cineworld, right, has been just beaten down with a bat to within an inch of their life. They may fail in phase 2. They may go under. But if they survive into the next phase, then all of a sudden you kind of look at them and go, oh, maybe there's an opportunity there. And same on the ASX in Australia, Village Roadshow, similar thing, operates cinemas and theme parks. No one's going to them right now. So that's crippling the business and smashing the share price to pieces. And they may fail in this phase 2 period. But if they do make it to phase 3, if they survive, even if it's by the skin of their teeth, people aren't going to stop going to the cinema when we're past the worst of the coronavirus and there's vaccines and all those sorts of things that are available. So all of a sudden there's these huge opportunities for these stocks that have been 50, 60, 70, 80% lower than they were around 2009, at March 2009, at the bottom of the GFC crash. They're trading at values around that. I mean, if you had a chance, let me give you one more thought. If you could go back to March 2009 and invest again, wouldn't you do it? This is a second chance, I believe, for investors to get in at these basement levels if these companies survive, which is why we got to sit it out for a little bit more.
Sam, I have a couple of questions for you. Before I ask you, it strikes me that the world is suddenly becoming people are becoming value investors again. All of a sudden, things like whether a company can survive or not becomes relevant, which of course it always was, but it makes you realize how crazy the last 10 years have been, which is no one ever really had to worry about that because most companies could just borrow more money and et cetera, which, Boaz, makes me think we should have Tim Price on perhaps tomorrow or the day after. Tim is a deep value guy, so I'd be curious to know what he is looking at. So I'm going to make a note to write to him. Sam, I have 2 questions for you. One is, you talk about figuring out whether or not these companies can survive or not, and I think that's the really operative point, which is how do you work that out? What are you looking for? And secondly, I know that you've been working with the rest of our editors, the advisors that we employ here at Southbank Research, to put together a bit of a report for what they're each looking at in terms of how to buy the bounce, so to speak, whenever that bounce might be. We don't know what it'll be. I'm curious to know what your sort of observations were when putting that together and what it is that you're looking at in particular.
Yeah, so when it comes to companies that can survive, it's a tricky one because a number of, almost all, lots of companies have got some form of debt or some kind of liability or borrowings that many of them are likely going to breach covenants and are going to go to their bank and they're going to ask for greater liquidity. So what I think a lot of people miss in all this, in the midst of smashing the banks to pieces and saying this is all because of bankers, the bankers now hold the lifeline to a lot of businesses that employ a lot of people, and they can very easily say, no, you're in breach of your covenants. We're going to call in those debts. I'm going to shut you down, call in the administrators. But what the general sort of information that comes through at the moment is that they're giving them, I guess, grace periods. They're giving them holidays, so to speak, on some of these debt obligations. They're actually providing them with greater liquidity to stay open, to keep people employed. And so people do miss the fact a lot of the time. And I'm not saying that, bankers are the greatest people on earth. They can be pretty shitty sometimes, to be honest. But at the moment, in situations like this, they actually keep a lot of businesses alive and a lot of people in jobs. And it's the companies that update the market to say that they've got an extension or they've got extra liquidity. They're able to at least keep the doors open as we move through this phase 2 that are going to be able to survive. Some just won't be able to do that at all. They will not have any revenues coming in when the doors are shut. Even with extra liquidity, extra borrowings, it's not going to change the fact that they don't have any forms of revenue whatsoever. So it's tough. You've kind of got to just wait it out a little bit with some of these. Obviously, ones that have got a big cash war chest and can tap into that in order to remain operations, or at least sort of a skeleton crew operations, they're going to be able to do okay, and that have immediately started cutting costs. So ones that have cut costs now, rather than saying, "Oh, we're going to sort of wait it out and then cut costs," the sooner they've done that to sort of to push out their runway, that they'll be better off for it. So again, we sort of got to wait and see. But there are a few things that we can look at to see the chances of the smaller companies surviving through this market out to the other side. And then, like you said, I sent a message out to our editors last week, and I just said, if you had one stock amongst all this hysteria and against all this fear, if you had one stock to choose that you think investors should be looking at, what would it be? Now, that's no easy task when you're asking, 6 of our editors, and myself included, to pick just one stock amongst all this mess. Because personally, I'm building up a watch list of I think I've got about 20 on there at the moment that I'm looking at when we shift into the turn up period. But they did, to their credit, and there are a number of the stocks that the guys brought back to me were US listed, which was interesting. I put one out there myself, and I said, I think investors should be looking at Aston Martin Lagonda. If you want to talk about a stock that's been smashed from pillar to post, just because they were getting smashed, rightly so, because of some pretty average management and some pretty average performance. But then off the back of the coronavirus as well, with China being their major boom market, I think there's something there that investors should be looking at, particularly with, Stroll coming in, luxury brand guy, knows how to make money out of luxury brands. There's money in the car market still. And when China fires up their economy again, and make no mistake, off the back of this, China is going to absolutely pump every single thing they can into their economy to fire it up and get all those cylinders pumping full steam, whatever analogy you want to use for it. They are going to smash their economy back into life. And that is going to create some crazy opportunity for companies that have got a major focus in the Chinese market.
It's interesting, the dwelling on the side of companies that are getting destroyed to within an inch of solvency and the like. And that brings us to the prospect of bailouts now. And Nick, you had an interesting thesis that you told me about yesterday, where we've all been waiting for what's going to be the great inflationary moment. And so far, because so much of the monetary stimulus has just been directed straight into the financial system, and similar, then we're going to see, we've not seen as much consumer price inflation as one would expect. So you had all those hedge fund managers who signed, a letter to the Federal Reserve saying, we think QE is inflationary, in 2009, when after the Federal Reserve had administered the bailouts. After the Treasury had created the money for the bailouts, after the Fed had administered them, and they were just saying, well, if you're going to do QE now, after everything's been papered over, we think it's going to be inflationary. And ultimately, it wasn't actually like that. It didn't happen that way. But you said yesterday, you think maybe because there's just going to be so many bailouts, of so many real life industries, not a financial system, but actual, for example, airlines. You think that this might actually be the next big inflationary wave? Is that right?
Yes, I do. Again, I'm talking about this kind of, we called it phase 3. Like, what world do we wake up to? So I'm trying to figure out what happens then. Because we've seen stimulus and we've seen liquidity measures from the state, and we've seen some fiscal stimulus, but it strikes me that there's a lot more of that to come. So there are certain, Sam talked about the companies that will just barely survive and will be buying opportunities. Okay, so there's that side. Then there's another list of companies that just can't survive, but that we need as a society, or the industry needs to survive one way or the other. So I'll give you 3 examples, although I could give you 10. One is airlines, like you said. If you accept that right now airlines are a non-viable business, but that the world will need air travel beyond this, that industry is worth having, then you need an airline industry one way or the other. You have to try and find a way of saving it. Another one might be the trains. There's already talks that the train companies here are suffering, that they might need a bailout. And I'll give you another example: care homes. There's been talks already about care homes needing some form of stimulus, nationalization, bailout. Now, these are all industries that I would say you need. You can't necessarily. I'm a free market person, but you can't just let them go to the wall. It's just not viable long term. It doesn't make any sense. So there has to be some round of bailouts, I think. There has to be a series of absorptions from the state, nationalizations, whether temporary or not, temporary stimulus, however you call it. There has to be something that keeps some of those industries going. We're probably not going to bail out the cinema companies, but we might well have to bail out the airlines or the care homes. And I wouldn't necessarily be against that because I can see the logic. But where does that leave us? I mean, it leaves us in a situation where a lot of money has had to be created. A lot of debts have had to be absorbed by the state. Now, there's 2 ways that could go. You could then get the inflation when activity fires back up again, when the doors reopen, the factories come back on. And not only do you get a resumption of activity, but you have all this extra money in the system that has to go somewhere. We saw after 2008, we didn't get inflation, but we got huge commodity price inflation. So there's that side of things. That leads me to look at gold miners. Also because oil prices are extremely low. So energy costs are going to be very, very low. And yet some of these companies are going to have extremely high margins on top of that. So that's one thing. But another idea I would say would be some form of jubilee that is required. Whether that is an inflationary situation or something more formal, I could see a situation in which so much debt has had to be absorbed because of a black swan. It would be sold to the public because we didn't see this virus coming. There would have to be some sort of jubilee. Of course, the free market or the fiscal conservative view on that would be, well, you didn't have to enter into this crisis with the highest levels of debt in history. You didn't have to have the easiest money in history. You didn't have to have all of those structural weaknesses in your economy. You could have saved money for a rainy day, but no one sees the rainy day coming until it's already raining. So let's just park that idea. I could certainly see some form of write-off or some restructuring of the financial system like we saw post-war, 1971, whatever it might be, that reorganizes how those debts work. What that looks like, I don't know, but I'm going to go on record now as saying I think it's likely because I can't see any other way out of it.
I think the counterpoint to the idea that there has to be bailouts is simply that, well, there's plenty of there's plenty of organizations out there which have saved for a rainy day. So Warren Buffett with his $100 billion in cash, for example. There were talks about him buying Boeing after the 737 scandal, and see how cheap Boeing is now. The idea that airlines, which so U.S. airlines, was that Bloomberg headline, which have spent 96% of their free cash flow on buying back their own stock to enrich their executives, should be rewarded by the state for their failure. is something that is only going to incentivize further moral hazard, and it's only going to create huge political and social unrest. Quite rightly, I believe, because these companies shouldn't have you shouldn't be just pursuing all these share buybacks. Why don't these companies simply just dilute their own stock and their own shareholdings in order to bail their own themselves out? Why don't they do a massive stock offering and then dilute their own shares and and reduce the wealth of their executives and their other shareholders in order to to stay solvent? I don't think
I have a counter argument though, because I agree with everything you just said, but I'm Mr. Carney and I've got this big machine that prints money here. So forget all of that. Forget any form of paying for your mistakes or saving for a rainy day. Let's just print the money. And you don't there's whether we agree with it morally or not, I just can't see a world in which that argument wins. Maybe it wins for some stuff, but I'm saying the amount of things that will just put their industries that will just put their hand out and say we need help of some sort, whether it's nationalization, stimulus, whatever it is, I just don't see the very sound argument you just made actually holding water at a state level. And I don't agree with it, but I think it's inevitable. And then, so I think we will have the opposite happen. And then it's, what do you do with all of that debt you've just created?
Oh, certainly. I mean, I think the bailouts are inevitable, or some kind of bailout of these industries is inevitable. And you've seen it happen before with the likes of Lockheed Martin decades ago, where the company was clearly very poorly run at the time. And yet they employed thousands of people, and they said to the government, there's no way, are you really going to let all these jobs, go down the hole if you let us fail? So yeah, I mean, I see it as inevitable. It's always the degree of the bailout though that is interesting, and what the clauses of the bailout are, whether or not who gets punished, what are the optics of this great this great intervention. It seems like the states are going down the road of giving everybody a check in the mail to try and get the economy back moving again, but it's not been said how it will be financed. So chances are it won't be helicopter money. Chances are it won't be the Federal Reserve printing the notes. But it looks like that's going to be, okay, well, we're going to bail out them, but don't worry, we'll bail out everybody else. Sam, what do you make of it?
Well, that sort of helicopter money, if that does or doesn't come, what I know from experience is that helicopter money doesn't work, because the Australian government did that in 2009 and it didn't work. It was just free money for us. Well, not free money. It was a bit like a tax reimbursement, really, when you think about it. But it didn't spark the economy back into this wonderful utopia. It just didn't work. And I think what we're seeing now is you guys are right in terms of there are going to be bailouts, but I think it's going to be a combination of state-based bailouts, but also private bailouts for those that have, like you said, those that have hoarded cash, those that are sitting on war chests, those that are ready to buy. There are companies out there that were probably looking at acquisitions before all this sort of thing happened, and now quite quickly a lot of their targets are significantly less. I think as we move out of this, you're going to see a lot more consolidation in industry. You're going to see things like hostile takeovers come back and be quite popular amongst those that have actually got a good war chest behind them. And you're going to see companies like Boeing probably get bought up by other companies. Maybe Airbus gets some sort of crazy stimulus from the Europeans, and then they say, well, actually, you know what, we're going to take a big chunk of Boeing and we're going to create this crazy plane monopoly that's sort of quasi-public, quasi-state-based to bail it all out. Because like Nick said, at the back of all this, airline travel is not going to stop. We still need to fly places. Otherwise, we're back in the early 1900s. So
before climate change was a thing, hey?
Good thing. Upside is no one's talking about climate change right now. Or it's like, the skies are so clear because no one's on the road. It's like, you reckon? So there's sort of two sides to how these bailouts, I think, will come. I also think that inflation is like a dead set certainty for the next decade. Which plays into the hands of Bitcoin particularly nicely. So it is. It's this weird flux of a new financial system kind of emerging at the back of this, because it's like 2009 all over, and it's just compounded on again, which I think is long for crypto. There are going to be stock opportunities just galore, commodities, miners, beaten down retail stocks. There's going to be acquisitions, consolidations across all industry. It's terrifying right now, but there is going to be wild opportunities for investors. That's my take on it.
Yes, I think that. Well, I think we've dwelled on quite a lot of interesting sectors in today's update. There is one last question I would like to ask you both, however, on the topic of what everybody is going to be doing when they're all cooped up at home. There has been some interesting, I think, observations that once all of this is over, we're going to see something of a baby boom. Do either of you think that's on the cards?
No.
Well, I've just had 2 children, so my son is still 3.5 months. So from experience, no. But do you know what? That's a really interesting question. I haven't really thought about it. Do you know what, Boaz? I'm going to make a broader point rather than answer your question, which is far more interesting are the questions about the second, third, fourth order effects and consequences of what is going on than exactly what we see in the next couple of weeks. I don't know the answer to your question. I mean, maybe this changes the demographics of the world if it plays out in a particular way, but I don't know about a baby boom just yet. Certainly not in the O'Connor household. My 2 boys. Thank you.
Right. It was interesting when you have like the likes of Japan, for example, which is notorious demographic decline, and everybody's always seeing coronavirus as something that is going to destroy the global economy. But it's interesting if people see the coronavirus as the fourth turning, one of these big generationally changing events. Well, the last time we had one of those was World War II, of course. Now the baby boom after it. We're interested to see, what are the long-term effects of this down the line.
I'd just add to that: just because people are stuck at home doesn't mean they change the way they view each other. It just means they spend more time on their devices.
Fair enough, Sam. Fair enough.
Stick with each other.
Well, thank you both very much for joining me. That was another market update from Southbank Research. My name is Boaz Shoshan, and thank you very much for listening.